Hey friends, thanks for joining us. We sure do appreciate it. Welcome to SGT Report. On the line today, we have a very special guest, Mark O'Byrne. He runs GoldCorecom. Also on the line, Peter and Rory. Mark, welcome.
Thanks very much. Thanks for having me on, Sean.
Well, thanks for being on. Gentlemen, Rory and Peter, how are you guys today?
Doing well.
Doing great.
Well, if everybody's familiar with GoldCore, and I don't know among our readers who wouldn't be, we post Mark's articles every single morning. GoldCore has become quite the go-to destination for quality information on the gold and silver market. Mark, before we get to my first question, which revolves around the COMEX halting gold trading the other day, can you tell us just a little bit about GoldCore?
Yeah, basically we've been in existence since 2003. I founded the company in 2003, and since then we have grown quite significantly. We now have clients in over 40 countries, but primarily it's the English-speaking world, so it's the UK and Ireland, and indeed the US, and indeed many English-speaking people in the time zone that we are in. But we would have a lot of US clients as well who are looking for storage offshore. And basically what we do is we're bullion experts, so we deal in physical coins and bars for delivery, as I said, around the world. And we also do storage, primarily allocated storage. Zurich, Hong Kong, Singapore would be the primary destinations where people are storing today. So that's it in a nutshell. Very kind of you to say what you said about our research. It's something we take, I suppose we take a lot of time to do, because we think there's such a lack of information in the marketplace, and it's important to help inform people and educate people, and that's why we spend quite a lot of time doing what we do in that regard.
On November 21st, the GoldCore headline read, COMEX halts gold trading twice in one day after $200 million sell trades. Is that a first, Mark? Is that the first time the COMEX has ever shut itself down briefly in two periods during one day?
Twice in one day is a first, absolutely, yeah. But it seems to be happening more frequently recently. It's the fourth time in the last 3 months. So it happened once in September, once in October, and then twice, as you said, on Wednesday. So it is happening more frequently, and I think that's leading people to ask more questions about what exactly is going on. And what's going on is that there is huge sell orders, as we alluded to. I mean, it was roughly about $200 million worth. It was one of the sell trades that went through. And interestingly, it only pushed the gold price down $10, but it pushed the gold price down $10 in a matter of 20 seconds type of thing, so it created jitters. And then obviously all the momentum players, the more speculative players, the hedge funds and banks piled in on top of that, and it was in large part responsible for we were down Monday and Tuesday anyway, but we're only down marginally, and then the selling that came in Wednesday really put the kibosh on, and it put the kibosh on prices, and it pushed prices lower. And it suppose it makes the people in the COMEX, who are by their very nature they're trend followers, but it makes them nervous to go long. It suppresses any sort of animal spirits or any sort of momentum getting into the gold marketplace. Basically, I mean, for years the debate has been, is the gold market manipulated, or is the gold market not manipulated? And for a long time we have said that we believe it is manipulated, but there's no guarantees, because we don't have a smoking gun. It's very hard to get a smoking gun, but there is a lot of circumstantial evidence for a long time to suggest that it is manipulated. There is obviously the historical precedent as well of the London Gold Pool. So the bottom line is it is one of the reasons why gold prices are lower in recent months, and it could actually be a large part. It's hard to know how much, but it's why people are asking questions, because the fundamentals of the gold market, in terms of the backdrop, in terms of the macroeconomics of the US, the Eurozone, and much of the world, are not very good at all. Indeed, they're very bad. Monetarily, the world is in a bad place. Governments around the world have huge deficits, and central banks are printing a huge amount of money. And then geopolitically, the world is a very uncertain place. Obviously, there's huge tensions in the Middle East still, and there is what's happening in the world in terms of the gradual diminution of US power in the world, and the rise of China, and indeed Russia to an extent. And we're moving away from this unipolar world. So we have these huge fundamental factors that should ordinarily they would be contributing to higher gold prices, and that's why many people are scratching their heads saying, well, why isn't that happening? And we're down about 25% year to date in the gold market. despite its very strong fundamentals, and that's why people are continuing to ask questions. And I think GATA, they've been asking these hard questions for a while. I think it's beginning to percolate into mainstream media. And interestingly, just I think it was the day before the halt of trading on the Wednesday on the COMEX, financial regulator in the UK said that they're going to be investigating the benchmark gold prices in the UK, which is the London AM fix. So it's obviously very different it's different to COMEX, but it's all related to the gold market, and we've seen what's happened in LIBOR. We know there's investigations now into the foreign exchange market. So there is, given what banks have been up to in recent months, there is likely to be funny business going in there, and it all basically means that our clients and people out there who've bought bullion and who are thinking about buying bullion, they need to fade out the sort of day-to-day noise and forget about the short-term weakness. They need to see this as basically it's creating a huge opportunity for them. They're getting an opportunity to buy physical bullion at much lower prices, and just because these I suppose the falling price makes people very, very nervous. It makes them nervous to buy, and we know ourselves, and I think the experience in the industry is a lot of people in the industry in terms of people who sell bullion are down very, very significantly because there is jitters out there in the mainstream marketplace. But we would say that the fundamentals are as sound, if not sounder than ever. I think they've gotten better in recent months.
But let me jump in there and ask you this, Mark. We talk about the fundamentals a lot. We talk about the fundamentals with Jeff Nielsen, with Andy Hoffman, with James Turk, with many people, many pundits in this sector. And the fundamental question is this: how is the average investor in the physical precious metals supposed to deal with really the psychological warfare that we face as these powers that be clearly pummel the markets day after day after day? Because I don't think that the idea of the manipulation is anecdotal. Andrew Maguire's work has pointed to very specific manipulation, which of course the CFTC doesn't seem to care about. My point is this: the manipulation no longer appears to be anecdotal. It appears to be quantifiable. And as we see Bitcoin, go to $1,000, I've always said that's the real salt in the wound for those of us who have invested in physical precious metals, because we should be reaping the rewards that the holders of this cryptocurrency are reaping. So here's my question. If we go back to the COMEX halting gold trading twice in one day, those $200 million in sell trades, was that physical gold or was that paper gold?
No, absolutely, and that's an important distinction you've made, and that's something that should reassure people. There is little no large liquidations of physical gold, and there have not been for months. All the selling that we have seen that has pushed prices lower has been very much in the COMEX. So yeah, your point is fundamental, and it's very important that people are aware of it. It is paper selling. These banks, bullion banks and hedge funds and whoever else is at it are basically selling huge tranches of futures contracts. So the underlying physical marketplace is actually very, very sound in terms of supply and demand. We know in terms of just the numbers, even the numbers from the World Gold Council, which people are beginning to ask questions about, even those numbers suggest that there is more demand than supply. We know that China, obviously, the demand is absolutely off the charts, and that reality is something we've talked about for years, and it's only slowly percolating into the mainstream media. A lot of the media has actually been very slow to report it, and even people in the industry were slow to pick up on the extent of the demand in China, and it is literally off the charts. And I mean, figures, the World Gold Council are saying it's going to be 1,000 tons for this year, which will surpass India for the first time. But many people in the industry are saying it could be double that amount. It could be 2,000 tons. And the numbers that we look at, the only numbers that we have transparency on is the numbers into Hong Kong and Hong Kong imports. But there are other avenues into China, directly from Australia into China being one way. Obviously, Australia is quite a large producer, and also from Thailand, from other regions in Asia into China. So the demand is absolutely huge. I mean, 2,000 tons, to put that in perspective for people, the annual gold supply is about 2,600 tons. So China itself is going to hoover up a huge amount of the supply in this 1 year, and that's just China. The demand in India has come off quite a bit because of the government's draconian war on gold, but they'll still be around 950 tons officially, and there will be a lot of smuggling coming in as well. And we're seeing gold turn up in kilo bars, turn up in toilets on planes going into India. Rory, sorry, you're going to say something.
As far as India is concerned, I'm glad that you're getting on to smuggling. I mean, I think that their demand is that of China. It's just that we can't see it anymore. I mean, a few days ago, it seems like the Indian government made a concession in that they're going to start allowing gold coins again. Their demand, like I said, I don't think that it's changed. I really don't. I think that the 950 or whatever it's going to come in at, it's going to be a lot higher because, like you said, it's all gone underground. Nothing stopped there. So,
No, absolutely, yeah, yeah. I mean,
where's it all coming from is the question that I have. I mean, if we can say that the World Gold Council that China's going to take 1,000 or more times, if over half of the gold that we know is going to be dug out of the ground is now going to these two countries, I don't see how it adds up. So if you could help me to understand that, I would really appreciate it.
Yeah, well, I think many people have the same questions. The entire industry is asking that question, you know. Sorry, not the entire industry, but many people on the bullion side, the physical side of the industry, who just don't understand it, you know. And I suppose the bottom line is from the figures, a lot of it is coming out of London. We see the figures, huge flows from London into Switzerland, and from Switzerland to the Far East. And what's interesting there, it is a lot of it is going from the institutional, so it's going from most likely from the bullion banks in London. 400 ounce bars, your London good delivery bars, are being moved into the refineries in Switzerland. Most of the refineries in the world are in Switzerland, and they're being refined and made into kilo bars, which is a format that is very, very popular in China and indeed trade in Asia. So that's where it's coming from, and again, is it coming from central banks? Is there central bank this hoarding going on there? I mean, it's quite possible because there's such a huge lack of transparency, and nobody seems to want to ask any questions of these central banks, you know, in terms of their gold reserves. And we know even the Germans, when they tried to get their gold reserves back in the Federal Reserve, they're told they can't get it for whatever it is, 5 years, 7 years, you know. It's crazy stuff. But the bottom line is, yeah, it's coming out of, most likely coming out of unallocated accounts in the London bullion marketplace. That's strongly the figures that you see, the UK export figures and the Swiss import figures. You can see that flow out of London into Switzerland. The Swiss demand itself has increased quite a bit. The German-speaking world, the Germans and these Swiss Germans, they tend to understand gold because of their historical experience. So demand has increased in Germany and indeed in Switzerland, but not of the scale that we're seeing. So it's very, very clear that it's moving from London, maybe from US to London as well. There could be something going on there, into Switzerland, and then heading out to China and indeed the rest of Asia, because people keep talking about China and it's absolutely huge, it's off the charts, but it is also wider Asia. People forget about Indonesia, huge population there, Vietnam, Malaysia, Thailand. There's just, you know, and these Asian people, they understand gold far more than people in the West, because we've had quite a benign experience with inflation in recent years, whereas they have had a far from benign experience with inflation. They understand that paper money is not worth the paper it's printed on, and they understand gold as a store of wealth, unlike many people in the West who, they've had a good experience with inflation in recent years. Most people, that's obviously changed in certain countries in recent years, but I suppose we've been conditioned over the years to trust paper money, whereas they don't trust paper money, and that's where the gold is flowing in quite a big way. It is a paradigm shift. It's always dangerous to talk about paradigm shifts, because most of the time they're not paradigm shifts. But China is a paradigm shift to the gold market, because from 1950 to 2003, so for 53 years, Chinese people were actually banned from owning gold for an entire, nearly 2 generations there. Chairman Mao banned gold ownership in 1950. The market was liberalized in 2003. So what that means is that it's absolutely huge, and it's important everybody understands this, because if you understand a few basic facts about the gold market, you'll sleep easier at night, despite the shenanigans that we see in the gold market on a daily basis now. The per capita consumption of 1.3 billion people in China alone, it's increasing from a near zero base, literally near zero in 2003. I mean, they were completely cleared out by it was banned, as I said, from 1950 to 1950. A lot of the gold actually flowed out into Hong Kong, into Taiwan, and into other Asian countries throughout that period, because they literally had a war on gold, a little bit like the Indians have started recently, except even worse, was a complete prohibition on owning gold. So again, the per capita consumption of 1.3 billion people is increasing from a near zero base, and even after a huge increase in demand we've seen in China in recent years, it's still nowhere near the levels of gold ownership that we see on a per capita basis in India. And the Chinese, it is on a par. I mean, the Indians obviously huge affinity for gold culturally, but the Chinese are not far off it, and gold is very much writ large in their psyche, and their currency collapsed in 1949. It's part of the reason that Chairman Mao banned gold ownership. So they had hyperinflation in 1949. The Germans, who are very paranoid about inflation, and rightly so, they had hyperinflation in the early 1920s, and they're still paranoid about it today, 90 years later. The Chinese, it's still in the living memory of many older people. So the aunties and the grandaunties and the grannies in China who are talked about disparagingly in the Western press, and they say, oh, these they're a bit misguided. They don't really understand investing. They don't understand yields. They're buying gold trinkets because they're not sophisticated investors. Hugely patronizing. It's quite the opposite. These people actually know what happens to paper currencies, and they're being very smart and very prudent, and they're gradually accumulating, and they'll continue to accumulate because the Chinese also, they've been encouraged by their government to do it as well. They have a bigger understanding of the big picture of what's going on in the world in terms of the race to the base, in terms of the risks posed to the dollar and indeed to all fiat currencies. So it's huge, and it's one of the it is a paradigm shift basically, and it's important that everybody's aware of it. And when we started talking about the paper market and the physical marketplace, they can mess around the price all they want. Ultimately, the price of everything in the long term will be dictated by supply and demand. Obviously, particularly for a physical commodity like gold, it will always be, the price will be dictated by supply and demand. And the physical marketplace, we know 2% per annum is roughly what's coming out of the ground. Meanwhile, the money supply in the world is increasing at 10-15% per annum. So there's so many metrics that would make you bullish on gold in the long term. In the short term, absolutely anything can happen. You have to own physical gold, because who knows, with the sort of craziness we're seeing today, who knows, they could push the gold. If they get the gold price below 1180 is huge support from June 28. If they push it below that level, who knows? You could see a lot more liquidations, and it could head back down to 1100, 1000. I think that's highly unlikely because already a lot of the mines around the world are struggling at these price levels. And plus, there's huge demand from China at the 1200 level, and it's believed that there's institutional demand, and central bank, the People's Bank of China, is buying on the dips around the 1200 level. So I'd be amazed if that happened. But it's quite possible, and it's important your listeners are aware of that. But they fade it out because you need to be buying gold for the medium to long term. It's financial insurance. You need to fade out the price, and even try to fade out the price on a daily basis or a weekly basis, and focus more on the ounce of gold, and what an ounce of gold has bought throughout history. And that's a very important thing to focus on, rather than the day-to-day price movements that we're seeing, which they're quite volatile, but they're actually less volatile than some of the crazy stuff you're seeing in bond markets and other markets. So sometimes the volatility is exaggerated. But so I would say fade the noise, focus on goals. I suppose it's a historically proven store of wealth, and that's why everybody has to own a small amount.
Yeah, Mark, my question has to do just with what you're talking about, and I don't own any gold. I'm all into silver at the moment, and who've been watching this for a while, we've seen gold hammered from 1900 down to the 1200s. And but at the same time, it seems that when gold gets hammered, silver gets hammered even more. I mean, we've also watched silver go from 50 down to under 20 now. And I guess, do you have a gold to silver ratio that I should be looking for to enter into gold? Or would you say just, it's a great buy now, go into it? Or because it's hard for me to justify buying gold when silver is the bigger value right now in my mind.
Yeah, I agree with you 100%. And we tend to focus more on gold and talk more about gold because more of our clients have a bias towards that, and indeed the media has a bias towards that. But we have done a huge amount of silver over the years, and I personally believe silver will massively outperform gold, and I would have a higher allocation of silver than I would have gold. So I agree with you, and I still think it's important that you own both metals, and I wouldn't have everything in silver either, But I think from a return point of view, I think silver will quite possibly significantly outperform gold. But you have to focus on the long term. I would be very confident that we will revert to the long-term gold-silver ratio, which is 15-1, and that was the ratio. If you go back to Babylonian times, you go back to Roman times, you go back to Elizabethan England, throughout history, it was 15-1, even up until the 19th century. It was 15-1, and that's because geologically the Earth's crust is 15 parts of silver to every 1 part of gold. And yet, as we know, silver is used in a huge amount of industrial applications, and a huge amount of silver has been used up since the dawn of the Industrial Revolution, and indeed in recent years as well. Whether it be photovoltaic cells, huge demand, medical in the medical industry. So yeah, we would be more bullish on silver, and we think long term that ratio will go back to 15 to 1. So if you said that gold was going to go to who knows, but let's say we said $3,000 per ounce on gold in 3 to 4 years time, which I think is actually quite possible given the risks that are out there, and the amount of currency debasement that's going on. And you divide 15 into that, you're getting silver at about $200 per ounce. And interestingly enough, I mean, silver traded at $50 per ounce in 1980. That was the record high in 1980, and then more recently in 2011, it traded at nearly $50 per ounce, which was the nominal high from 1980. And if you adjust for inflation, which is absolutely crucial to do, obviously it's quite significant inflation since 1980 to today, 33 years. The inflation adjusted high for silver is about $140 per ounce. Yeah. So we have said for a long time, it will get there. Who knows? It could be in 5 years or 10 years time. We think it's probably a lot sooner than that, and it's sooner rather than later, given the very significant physical demand that we're seeing in the silver market. And quite interestingly, just on that, on Friday, quite significant activity in terms of the COMEX warehouses on silver, and there was over 2.55 million troy ounces were received, and basically 1.9 ounces were received by HSBC. So for them to take that into the registers means that there's some big demand for silver out there, and I think we could see fireworks in the silver marketplace fairly soon. But
yeah,
who knows when? We've been expecting that for a while. We've been wrong. So but you need to be patient and focus on the medium to long term is the bottom line. Yeah.
Well, and here's where I want to jump in on silver. We talked earlier in the interview about psychological warfare, the paper markets, and the psychological warfare against those of us who have really been smart enough to make an investment in physical precious metals, because we know that there is at least 100 to 1 manipulation. There's at least 100 times more paper ounces than physical ounces in both gold and silver. This according to Jeffrey Christian. But there's also actual warfare. There's physical warfare going on behind the scenes as we see bullion change hands and all of the behind the scenes stuff that you just mentioned there, Mark. The current mining ratios as they pull gold and silver out of the ground is that for every 1 ounce of physical gold that's mined, there's 9.5 ounces of silver that's mined. Now, the historical average may have been 15 to 1. Silver's becoming so depleted and difficult to find that it's now far less than that, and the mining companies are losing money, which leads me to this jaw-dropping statistic. Really, there might be about 1 billion ounces of physical silver above ground in stores because so much of it has been used up in industrial applications, right? So if we just say that on an annual basis, if 600 or 700 million ounces are being mined and it's all being used up for the most part, maybe there's even a deficit. Maybe it's being used up even more than what's being mined out of the ground. So let's just keep that 1 billion ounces of physical silver statistic in mind. 1 billion ounces of physical silver is worth about what? $22 billion, right, guys? Check this out.
The Federal Reserve prints that in 1 week.
That's right. Check this out, though. According to Forbes, the total value of all Bitcoins in circulation right now is $5 billion, and that was a week ago. It's probably more than that now. So imagine 20 billion ounces, $20 billion worth of physical silver on planet Earth, really, at this point, that hasn't been burned up, used, or thrown in a landfill, versus this new cryptocurrency based on ones and zeros with nothing backing it but confidence is already worth $5 billion. That should paint a picture in everyone's minds how manipulated and what a precious asset physical silver is at these prices. Your thoughts, Mark, before we lose you? Your thoughts?
Oh, absolutely. I know it is, and we've talked about that. It is 1 billion ounces is the figure for refined silver above ground, so that's available to be invested in. So that in itself is an incredible figure because there are hundreds of billionaires in the world today. Back in 1979, the Hunt brothers cornered the silver market and they pushed prices up to $50 per ounce. It started 10 years earlier at about $2 per ounce. It went up roughly 25 times, just roughly 25 times in the 9 years, and the Hunt brothers pushed it up the last thing. And there was only a handful of billionaires in the late 1970s. Today there are hundreds of billionaires in the world, including billionaires in Russia and China, and people who are not within the American sphere of influence. The Hunt brothers were in effect taken out, and their positions were unwinded. So if any one of those billionaires decides, right, well, and they realize what you just said, they could very quickly start trying to corner the silver marketplace, and that's when you will see fireworks. The other thing is the market capitalization of Twitter alone. Twitter, which is it's a great medium and we all use it today, but it has little or no profitability. It is worth 20 billion in market capitalization. So that is the same value of all the silver in the world that's above ground. It's just phenomenal. This one technology company that's come out of absolutely nowhere, and that may not be in existence in 5 or 10 years' time. And another statistic is the Federal Reserve is printing 85 billion every single month. Mm-hmm. So in 1 week, the Federal Reserve is printing money to buy their government debt. I mean, it's mind-boggling, and it's mind-boggling that the media is condition people to think that we're in a recovery. There's nothing to worry about, nothing to see here. Don't buy gold and silver; they're barbaric relics. To me, that is what's mind-boggling. The gold and silver, they remain absolutely opportunities of a lifetime, and they will protect people in a huge way, and potentially people will make fortunes as well, but they're not about making fortunes per se. They are about protecting what you have, and it's important you own physical gold in the safest way possible. Physical coins and bars, take delivery, own it in allocated accounts, and if you do that, you'll be protected in the coming years. But I agree with you. Silver is just, to me, it's a no. It's very I hate when people say it's a no-brainer. You can't lose. It's as close to a no-brainer and as close to a can't-lose investment today, and people need to be aware of that.
Mark, thank you so much. Why don't you inform folks about how they can get involved over at GoldCore? If you want to open an account with you guys, how does it work?
Well, basically, it's free sign-up, and it's also free sign-up for research at this moment in time. So you can just go on our homepage or go on our blog page, and you can just sign up, and you'll get our daily market update. You'll get quarterly reports, and then you get high-level research pieces. We're actually working on a very important research piece on bail-ins. We haven't talked about bail-ins today, but I think it's absolutely huge. It's a game changer, and a few people have been talking about it. Jim Sinclair's done some good stuff on it, but we have really sort of gone really in depth into it. We've got a 60-page report on it. We're looking exactly where it's coming from, and people don't realize this is coming from the very, very top. It's coming from the Bank of International Settlements, and they're pushing the bail-in regime, and the bail-in regime is coming. We're moving from bailouts to bail-ins. So yeah, you can sign up for our research there, and we'll hope to help and inform people. The account opening process, it's free. You sign up an account for us. We do physical coins and bars. The one thing for most of your listeners are obviously in the States, offshore storage is quite important, and it's important you have some close to home. But in a worst case scenario, it's good to have some offshore, and Switzerland and increasingly Singapore, the two places where we do have high net worth clients in the US. But we do deliver in the US, and we also have a gold accumulation program where people can save in gold on a monthly basis. It's a direct debit or a standing order, and you just set up and you do $100 per month if you want to gradually accumulate gold and dollar cost average, accumulate position, and then after 12 months you can actually take delivery of the gold that's basically stored in a AAA rated government mint, the Department Mint of Western Australia, and insured by Lloyd's of London. If people have any questions, just feel free to shoot in an email. It's info@GoldCore.com.
Well, Mark, thanks for taking the time to join us today. Let's get you back on in another couple of months, if that's okay with you, because this was definitely this was an enlightening conversation.
Yeah, no, you guys are doing great work. I enjoyed the Gerald Salente interview there last week. It was really, really great interview, and keep up good work, and it was a pleasure being on.
Oh, thanks so much. Well, it's always easy to talk with educated, smart, articulate guys like you and Salente and all the others, Andy Hoffman, Harley Schlanger, Jeff Nielsen. The list is long. Thanks for joining us. Thank you for joining us today, Mark.
Thank you, Sean. Enjoy your weekend.
Enjoy yours, sir. Guys, thanks for tuning in, and please also continue to support us over at sgtreport.com and thelibertymill.com, where you can find real news, truthful news, 24/7. Thanks for watching.